On Business Incorporated today. Exxon Mobil declares force majeure in Nigeria. Celebrating 43 years of independence, we'll take a look at some highlights of the macroeconomic realities in Zimbabwe. Zambia introduces new anti-money laundering policy. Good afternoon. Welcome to another episode of Business Incorporated here on Channels Television. I'm Ini John Mekwa. We'll delve right into the markets and we see that Nigeria's NGX, not negative, but neither is it positive, is 0.00% at intraday, even though it's looking bullish. And then we move over to South Africa and see that that is wholly in the green, 0.81% at 78,357.56. Looking at other countries under continent, EGX of Egypt is deeply in the red, 0.91% at 17,511.02. Kenya closed yesterday. We see also in the red at 1.63%. That's Thursday's numbers. We move over to the Middle East there, looking at it's mixed sentiments. We see in the market there in the Middle East. Abu Dhabi is in the red, 0.17%, 9,630.05. Dubai is also in the red, 0.26% at 3,504.75. Looking at other regions, Saudi Arabia is on the flip side, 1.19% at 11,163.57. Qatar, however, is in the red, almost 0.5% at 0.46%, and that's for Qatar. Let's go over to Europe now, and we see that the European Union is set to pass sweeping reforms to EU climate change policies with the aim of making them more ambitious and a big upgrade to the bloc's carbon market. The EU wants to be climate neutral by 2050. And we know that, of course, this has been in the face of the war going on in Ukraine. Well, for more, let's have Cassandra Sant now to tell us the details of this. Cassandra, good afternoon. Good to have you. Well, the big stories, the revamp of carbon markets within the EU. What are the changes? What do we expect to see? What will be different?
Thanks for having me. And you're right, Europe's carbon market will see quite a few big changes. Let's talk about power plants and factories first. So under this plan, they will now have to buy CO2 permits when they pollute. And while the EU has slashed those sectors' emissions by 43% since 2005, that's the baseline that we're comparing a lot of these figures to, this revamp is looking to hit even more ambitious targets to help combat climate change. So compared to that baseline 2005 emissions level, the EU wants to keep cutting and reduce emissions. They want to hit a 62% total reduction in the next 7 years. And under this plan, factories will also gradually lose the free CO2 permits by 2034, with another aim to start forcing the shipping industry to start paying for their emissions by 2024. So there's also going to be a first of its kind plan to impose CO2 levies on imported goods, including steel and cement, starting in 2026. The EU says that policy is designed to put European and foreign firms on a level playing field. So that's a lot of rules, but alongside these new rules around carbon emissions, the EU is also launching a nearly 87 billion euro fund to help consumers cope with costs across the bloc.
Yeah, well, a whole lot there, especially when we see Germany still depending on coal, but I guess it's a step-by-step journey. Well, this vote is supposed to be fairly smooth, but talking about Germany, we had them throw up some objections involving cars. Tell us more about this.
Right. It all had to do with cars and combustion engines, critically. So combustion engines are also known as those traditional car engines that use gasoline or diesel fuel. So the complaint here that really held up the process was German opposition to a part of the plan designed to phase out new fossil fuel-powered cars by 2035. Germany wanted to make sure that so-called e-fuels, or synthetic fuels used to power combustion engines, would not be included in the ban, or at least not all of these kinds of synthetic fuels. Now, some German industrial giants, including Siemens, have invested heavily in green energy-created synthetic fuels. So Germany and its allies in this squabble were able to reach an agreement with the EU negotiators surrounding this deal last month. According to the German transport minister, combustion engine vehicles would still be able to register after 2035 if, and this is critical, if they use fuels that are neutral in their CO2 emissions. And that was the deal that cleared the way for today's vote.
Well, a capital if there, Cassandra. But let's see what all this is doing to the market. Any shocks there?
Well, as a rule of thumb, the European Parliament tends to move fairly slowly. They have quite a few members with varied interests that they have to keep in mind. So that's to say this has been long discussed, and so none of this is going to come as a shock to investors or to these companies. Industry experts, for example, have anticipated the new EU rules already by massively investing in electric vehicles in recent years, with some corporate combustion engine goals even trying to outpace the EU-wide rule. And in terms of the carbon market, the price of carbon has soared in recent years, quadrupling since the start of 2020. The benchmark EU carbon price was trading at around 93 euros per ton of CO2 yesterday, so that's ahead of this vote. And in February, it hit 100 euros per ton for the first time.
All right, thank you so much, Cassandra Santa, for giving us details. Talk to you again tomorrow. Going to other markets now, Asia-Pacific markets were mixed as China's economy grew more than expected at 4.5% year-on-year, beating estimates to see growth at 4% in a poll. The onshore Chinese yuan slightly strengthened following the report. The Shanghai Composite reversed earlier losses and closed 0.23% up, while the Shenzhen component climbed 0.04%. In Hong Kong, the Hang Seng Index declined 0.77% as consumer cyclical and technical dragged down the index. Australia's S&P AX 200 fell 0.29% to end the day at 7,360.2, while South Korea's Kospi fell 0.19% to close at 2,571.09. The Kosdaq ended the day marginally down at 909.02. Japanese markets bucked the trend in the region, with the Nikkei 225 closing up 0.51% at 28,658.83, posting its eighth straight day of gains. The Topix gained 0.69% to end at 2,040.89 as financials and healthcare led the index. Overnight in the United States, all three major indexes rose as traders combed through the latest batch of corporate earning results, searching for clues on the health of corporate America. And we will certainly bring you more about that, talking about the United States in a bit. So yeah, let's go that way now. Stock futures rose on Tuesday morning, boosted by an important round of first quarter earnings results that topped Wall Street expectation and suggested that companies are faring better than fared in a tough economic environment. Let's look at the numbers right there. The Dow Jones in the positive 0.23%, S&P 500 also positive at 0.34%, and NASDAQ also positive at 0.65%. Let's go to London now, where we did see a new face in the morning, talking about Teniola since she moved to the United Kingdom. Teniola, good to see you on this side, looking bright and good. Is UK treating you better than Nigeria?
Hi, Uni. Yeah, So far, so good.
That's
It's good to see you too.
Good to see you, Daniela. That's not fair. Anyway, so I'm looking at... All right, so let's look at the prepayment meter in the UK. I mean, we've been talking about this with Juliana, some new rules here and there. Now, what are these new rules and what are people saying about it?
Right, and so these new rules are to tackle the forced installation of prepayment meters, which the UK has seen more of due to energy prices soaring last year following Russia's invasion of Ukraine. But the ironic thing is these pay-as-you-go meters can be more expensive for customers than a direct debit. So what happens is these prepayment meters leave vulnerable customers at risk of running out of credit and losing access to light and heating. So the code of conduct outlined by the regulatory authority today, Ofgem, says energy firms, they must try to contact a customer at least 10 times and do a welfare visit in which they wear a body camera before they can forcibly install a prepayment meter. The new guidelines also say installations should not take place where people have severe illnesses and in homes of people 85 and over. While the government has said that this is a step in the right direction, charities say it doesn't go far enough and that the code of conduct is only voluntary and it needs to be firmly enforced to protect vulnerable people.
All right, so let's look at the markets now and see how's it looking at intraday.
Well, the markets, the all-share index is up by 0.20%. The FTSE 100 is also up by 0.23% as investors digest UK unemployment figures that we mentioned earlier today, and also amid predictions that UK inflation dropped below double digits in March. The FTSE 250, the domestic market, is up 0.01%. In the currencies market, the British pound is currently trading up against the US dollar by almost 0.5% at 0.48. It's also trading up against the euro slightly by 0.01%, and the British pound at intraday is also trading up against the Japanese yen by 0.16%.
All right, Tatinela, thank you so much for that and enjoy the rest of your day.
You too, Annie.
All right, let's go to the global oil space now. Prices fell for a second day on Tuesday as upbeat Chinese economic data failed to deflect the focus from a possible increase to United States interest rates and wider concern about the growth outlook. Crude prices were also pressured by the Iraq federal government and Kurdistan regional government taking a step towards a resumption in northern oil exports from the Turkish ports of Ceyhan after they were halted last month. Brent crude last fell 10 cents to $84.66 a barrel, giving up early gains. U.S. West Texas Intermediate crude lost 15 cents to $80.67 a barrel. Earlier in the session, oil had found support from figures showing that China's economy grew by a faster than expected 4.5% in the first quarter, and that oil refiner throughput rose to record levels in March. Let's take a break now. When we come back, we do have more stories waiting for you on the other side of Business Incorporated. This is Business Incorporated. Welcome to the other side of Business Incorporated. Now let's head to West Africa, where Cotonou, we focus on, is a leading producer of cotton on the continent, exporting about 700,000 tons each year. However, the government of that country has recently embarked on a mission to capture more of the cotton's value by processing the raw material in Benin rather than exporting it elsewhere. How can they achieve this? And of course, how can Nigeria tap into this? We have joining us for this conversation, Adeye Adegusi, analyst with Financial Derivatives Company. Thank you so much, Adeye, for your time. So, cotton seems to be far-fetched from the minds of a whole lot of people, but what's the reason for this attention when we talk about Cotonou now, trying to get more value out of it? What's the reason for this attention that the country is giving to cotton at this time? Any special thing happening around it?
So over the last few years, Benin has become one of the largest producers of cotton in Africa. Traditionally, it used to export his unprocessed cotton to countries like Bangladesh. But now they have signed an initiative with Africa Industrial Initiative Program, which is a subsidiary of African Finance Corporation, to process cotton, not just cotton, but other agricultural produce, and export it to countries like the US, the UK, Asia, and other African countries. This program is expected to provide about 300,000 jobs and increase their GDP by 4 billion, all by 2030. And the main site for this is the low GDP industrial zone in Cotonou, which is expected to house over 32 textile factories. And there's been an investment of almost up to $1 billion into the zone alone. The zone will be powered by renewable energy sources, as there are solar panels and solar grids, solar plants already being in works and being constructed to power the zone already. So right now, Benin exports about $600 million worth of cotton, but upon completion of the project, it's expected to average about 11 billion annually. That's the exports, about 11 billion annually. So there's a huge gap between unprocessed and processed cotton exports. And that's one thing we can tap into, because the price of processed cotton t-shirts. Now, I forgot to mention, they signed an agreement with an American clothes brand to export 50,000 t-shirts to the US. And this will add to their export earnings, especially as cotton accounts for 80% of Benin's total export earnings, which is positive for their economic growth.
Now, if we look at Nigeria, Nigeria has a total capacity to produce about 602,000 metric tons of cotton. But we've seen a drop in the production in Nigeria recently. Are we able to place our finger on what exactly is responsible for that and what can be done to resuscitate that industry?
Cotton production started with the establishment of the Kaduna textile industry in 1957. It used to be one of the largest in Nigeria and one of the largest in Africa as a whole. The cotton industry employed over 500,000 people and across 167 textile mills. But now, unfortunately, it only employs about 20,000 people across only 24 textile mills. So cotton production in Nigeria is mainly hampered by low production, low output, due to use of low-yielding seeds, which have been damaged by pests and infection, because cotton crops are highly susceptible to damage and pest infections. So now this led to initiatives like in 2015, the Raw Material Research and Development Council, they offered about 5.82 million metric tons of cotton seeds to farmers. This led to an average increase of 5% between 2015 and 2017. Also, cotton is part of the committee under the Anchorage Borrowers Program. So in 2019, the CBN offered 150,000 low-scale cotton farmers seeds, fertilizers, pesticides. So despite all of this, Nigeria's cotton output still remains low compared to other high African countries like Burkina Faso and Mali. But we can learn lessons from them to improve our own outputs. For instance, in Burkina Faso, they have adopted the use of genetically modified seeds, which are less susceptible or vulnerable to pests and diseases. On the other hand, Mali, they allocate a significant amount of their budget, about 19%, on subsidies, which cotton is the foremost benefactor of this. So, taking a look at our neighbors and what they have done to boost cotton output, is not just about producing it locally, but also providing processing facilities to boost exports, which will be positive for Nigeria in the near term.
All right, Adeye, thank you so much. We do hope that we will see the results of those efforts, both from the Anchor Bearers program and even for Cotonou itself. Thank you for your time this afternoon. All right, just before we go, crude oil lifting from Exxon Mobil facility in Nigeria has been halted following a force majeure declared by the company. Nigeria has struggled to pump enough oil to meet quota by the organization, petroleum exporting countries, that's OPEC, because of theft and vandalism. Output stood at about 1.2 million barrels last month against the 1.8 million barrels projected in the 2023 budget. The recent increase in oil production is said to be significantly hit by Exxon Mobil, which has declared this force majeure on oil lifting from different terminals in the country. The declaration follows an industrial action by the company's in-house workers' union. Last year, Nigeria's oil production dropped to around 1 million barrels, following behind Angola due to departure of companies such as Shell PLC, Total Energies, and that was caused by extensive corruption and security concerns. Currently, Nigeria is making efforts to boost oil production to 1.6 million barrels per day in order to regain its former status as the largest African producer of the Organization of Petroleum Exporting Countries on the continent. We say congratulations to Zimbabwe as they celebrate 43 years of independence. Now let's look at the economy as they celebrate 43 years. The service sector makes up 60% of total GDP as of 2017, with a record of being the second biggest informal economy in the world as a percentage of its economy, with a score of 60.6%. Agriculture and mining largely contribute to exports. After continuous negative growth between 1999 and 2008, the economy of Zimbabwe grew at a metric annual rate of 34% from 2008 to 2013, rendering it the fastest growing economy in the world. Growth since then has been volatile, but averaged at 5% on an end-to-end basis. For March this year, 2023, the country's annual consumer price inflation was at a one-year low of 87.6%, down from the prior month's 92.3%, which had jumped to a 1.5-year high of 285% in August. And it's been going downward trend since then. Also in March, Zimbabwe started measuring inflation using a weighted average of items priced in Zimbabwean dollars and US dollars. And also, there's a new country economic memorandum in the country that reveals that Zimbabwe's growth performance has been challenged by its large informal sector, complicating productivity growth, effectiveness of policies, and long-term development at the macroeconomic level. Pervasive informality limits the tax base and constrains the government's ability to mobilize domestic resources. Well, that's the program for today. Thank you so much for being a part of Business Incorporated. We'll do it again tomorrow, God's grace. I'm Ini John Mekwa.